Tesla is a car company that has been making waves since it went public, also known as an IPO. Since the business started, the value of its shares has gone up a lot. Tesla makes more electric cars than any other company and is one of the stocks that experts talk about the most. In this group is Cathie, an expert. She has been a bullish Tesla investor since she is the CEO of ARK Invest. She thinks that Tesla and a few other tech companies will grow a lot in the next 5 to 10 years. She believes that by 2025, Tesla shares will be worth $3,000. But today she talks about what would happen to Tesla stock if the stock market crashed. In a market crash, what should you keep an eye out for? Would Tesla do well if the market went down? Let's watch this video to find out. Stocks aren't doing well so far in 2022. Because of this, markets have had a hard time getting back on track. Investors are worried about the Federal Reserve's plan to make money tighter and high inflation. On the morning of January 24, Tesla shares dropped as much as 10% to $858.83. This caused most electric car manufacturers' stocks to fall along with them. Nikola Corporation's stock dropped 10% from its January 21st close price to $6.70 before rising back up. Rivian Automotive stock hit a 52-week low of less than $60 per share. Rivian Automotive and other electric car startups recently made up for big drops during the day after hitting all-time lows during a market sell-off. Rivian Lordstown Motors, Faraday Future NIO Canoe, Nikola Corp, and Electric Last Mile Solutions all saw their prices drop by 10% to 18% before they recovered their losses by selling as the markets as a whole did. It was a good day for Nikola Lordstown Motors, Canoe, and Elms as they closed, with gains of 1% to 5.5%. Stock in Rivian went down by about 1%. Shares of the Chinese carmaker NIO, on the other hand, fell by 9.1%, and Faraday Futures lost 4.7% at the end of the day. Changes in pre- and early earnings. Companies that make electric cars kept an eye on changes in the market as a whole. Investors chose to buy cheap after prices dropped sharply in the morning, having dropped as much as 4.9% earlier in the session. It got better for the Nasdaq Composite Index. After going down more than 1,000 points, the Dow Jones average went up by about 100 points. Tesla, General Motors, and Ford Motor Company shares all fell by less than 2% at the end of the day. Rivian shares, which are one of the most closely watched EV startups, dropped below $60 per share for the first time since the company's huge IPO in November 2021. The price of the stock has dropped 38%, not making enough money. Wedbush Securities analyst Dan Ives says that a lack of chips, a crisis, and a lot of production problems have made the electric car market look bad. Off the market for this risk. Startups that make electric cars are caught in the middle of this market storm. At the moment, the analyst told CNBC in an email that getting things done is important for rebuilding trust on the street one brick at a time. At the time this video was made, Tesla's stock price was $888.40, down about 6% from when the market opened. Nikola and Rivian's prices were 7.6% and 4.6% lower, respectively. Other companies that make electric cars haven't made any money yet because they are still figuring out how to get into the market. Even though Tesla has been around for a long time, its stock price went through the roof during the pandemic because of record sales and the Biden administration's choice to make electric cars a priority as part of its climate change strategy. People who wanted to get in on the action with electric cars put a lot of money into Tesla stock, which helped the company go over the $1 trillion mark. But because of this, the stock's path has changed in 2022. Since the start of the year, Tesla's stock price has dropped by about 24%. Strange because the company said it had record deliveries and experts gave the company great reviews. The car company still has to deal with the threat of a tech market sell-off, though. One example is the Nasdaq, which is now in correction territory after a record sell-off. Because of this, investors are lowering the amount of debt in their accounts and putting less money into risky investments. This list has stocks that are likely to make money in the future. Long-term buyers may be used to seeing stock prices drop like the ones happening now in Tesla. It's been known that Tesla's stock price can change a lot, so the recent big drop in price wasn't totally a surprise. Analysts think that the car company will be the leader in the future electric vehicle market. Morgan Stanley, which has been a Tesla bull for a long time, put out a note saying that Tesla doesn't have any direct rivals. The company said that as they continue to watch Tesla's model rollout play out, they think that investors and car companies may change how they plan to make electric vehicles in terms of volume. On the other hand, only 11 of the 41 experts who follow the company have given the stock a sell rating. Their bullish theory is based on how the company works in general. Even though other car companies were having a hard time dealing with the pandemic's problems, Tesla was opening plants, coming up with ways to get around the chip shortage in the auto industry, and reporting record deliveries. The success of Tesla has been praised by analysts when it reports earnings on January 26th. Tesla is one example of this. Bill, even though the market for electric vehicles has recently gotten help from the government, it hasn't caught on enough to compete with gasoline-powered vehicles. In the first half of 2021, for example, only 7% of all cars sold were electric. Many people think of Tesla as a stock with a lot of risk and a lot of gain. It is one of the most interesting companies in the world. Elon Musk, the founder of Tesla, is a famous but controversial tech star. Investors had higher hopes for the company because it comes from Silicon Valley. Even more people were interested in Tesla in 2021, when the company's market value hit $1 trillion, a huge amount of money that had only been owned by a few megacorporations before. It's hard to say what will happen in Tesla's future, but it could be very exciting. Tesla investors should be realistic about their hopes and think about the risks the company may face in the next 5 to 10 years. There are a lot of risks with Tesla, but a lot of people still do it because the stakes are so high, and the company is doing everything it can to fight and reduce these risks. Why is it dangerous? Well, for starters, the Model S is very expensive. As of November 2021, it starts at $94,990, even with tax breaks and other helpful government programs. As of May 2021, even Tesla's new, cheaper Model 3 costs $43,990 before tax breaks and gas saves. This level of price is still too high for most drivers. Tesla has to pay a lot of money to make these cars, so regular people actually can't afford to buy them. Gordon Johnson, an analyst at Vertical Group, says that the company lost about $14,000 on each Model 3 vehicle it sold in 2018. However, these numbers may get better as the business grows. A lack of batteries to power their goods was one of the first problems that Tesla executives had to deal with. The company's battery problems should be fixed by the Gigafactory, which is still being built in Sparks, Nevada. It is believed that the lithium-ion manufacturing plant will help make more than 500,000 Tesla cars every year. Logistical and legal problems often get in the way of big projects like the Gigafactory. We still don't know if the building will be finished on time. The Gigafactory has been allowed by the Nevada government. It is expected to add $100 billion to the economy over the next few decades. Musk has said that one Gigafactory might not be enough to meet demand, even though the building is only 30% done. To meet the demand, the company might need more than one of these sites. It will cost a lot of money to keep the company fully charged and the owners happy. Another problem is that there are more electric vehicles on the market. Tesla isn't the first company to work on electric cars. Thomas Davenport may have created the first electric cars as early as 1834, which is an interesting fact. Even though Tesla's prices are high and its range is short, it seems to be the most successful so far. As of October 2021, the Chevrolet Bolt and the Nissan Leaf, two well-known rivals, had not yet caught on. The Nissan Leaf starts at $27,400 before discounts, and it can go up to 226 miles on a single charge. As of 2021, the 2022 Chevy Bolt has a range of 259 miles and starts at $31,000 before incentives. This is farther than the standard Model 3's range of 220 miles. Some of the companies that want to sell electric cars in the next few years are Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW. Tesla's market share could start to drop if this happens. In the transportation business, Apple thinks it can compete with Tesla. Google has also bet on the car business. Tesla is worried about companies with bigger customer bases that are valued at $1 trillion, which makes sense. It's hard to argue with Tesla's success as a maker of electric cars. But there are a lot of things that could get in the way that need to be fixed. For example, making affordable electric car technology is hard,